From the library of the New York Stock Exchange at the corner of Wall and Broad Streets in New York City, you're inside the Ice House, our podcast from Intercontinental Exchange on markets, leadership, and vision in global business. The dream drivers that have made the NYSE an indispensable institution of global growth for over 225 years. Each week, we feature stories of those who hatch plans, create jobs, and harness the engine of capitalism. Right here, right now at the NYSE and at ICE's exchanges and clearinghouses around the world. And now welcome inside the Ice House. Here's your host, Josh King of Intercontinental Exchange.
Washington, D.C. is known for its hot summer months when most of the nation's capital head out to Delaware, Virginia, or the Carolina shores to stave off the heat. And as a former resident, I can certainly attest to this. There are only a few events for which most Washingtonians are brave enough to venture outside within the Capitol during the summer, including listening to jazz in the Garden at the National Gallery of Art, flag waving, the National Independence Day Parade, or sitting courtside in beautiful Rock Creek Park watching tennis greats. The City Open has been a D.C. summer ritual for over 50 years, bringing some of the most innovative changes to tennis, including blue courts, instant replay, and a Sunday main draw start. In 2019, with new management, the tournament took on new meaning as a Washington summer tradition. Mark Ein, our guest today, is the founder and owner of MDE Sports, which owns the City Open and the Washington Castles World Team tennis franchise. In addition to his tennis endeavors, Mr. Ein is an investor, entrepreneur, philanthropist, and a civic leader. Mark's acquired, invested in, and built a series of growth companies across a diverse set of industries over the course of his 30-year career. During this time, he's been involved in founding or early stages of 6 companies that have been worth over $1 billion and has led to over $1.8 billion in private equity, venture capital, and public company investments. He has a deep insight into all aspects of the SPAC market and its history, given his experience of successfully raising SPAC capital and executing SPAC mergers over the past 13 years. Our conversation on 2020's SPAC boom and what to expect in 2021, it comes right after this.
Navigating dynamic markets requires a relentless pursuit of knowledge. Now, join market experts to learn with ICE Education Live. Attend live video training with practical lessons across global asset classes. On-demand modules provide base knowledge. Participants can then attend live training sessions, including group review and tests for certification. We also tailor training for your needs and in-house projects. ICE Education Live courses. Continue your education today.
Our guest today, Mark Ein, is an investor, entrepreneur, philanthropist, and civic leader who has acquired, invested, and built in a series of growth companies across a diverse set of industries over the course of his 30-year career. Most notably, he's the founder, chairman, and CEO of Capital Investment Corp 1, 2, 3, 4, and 5. Welcome, Mark, inside the Ice House.
Josh, thanks for having me. It's a pleasure to be with you today.
So you joined me here, Mark, on the first Tuesday of 2021. We'll be discussing 2020 in detail a bit later, but can you share one of your highlights from the past year?
Well, I think the biggest highlight is getting through it in good health, with everyone in my family getting through it in good health. It was obviously a challenging year for everyone in the world, and unfortunately a very tough year for so many people. For me, my top priority was really to keep my family safe and healthy, as well as the people who work for our companies, making sure that we help shepherd our companies through the year, some of which found a lot of opportunity in 2020, some of which had to overcome meaningful obstacles, but trying to help shepherd those companies through those times and try to keep the people who work in those companies safe as well.
Bring me back to, I don't know, you could call it February or March, but how did you scramble everybody and get everyone to safe places and surely re-engineer the way you operate, manage, and lead?
Yeah, I mean, it really, for all of us, it came a bit out of the blue. I had been in Davos in January, and there was just a little talk about this virus that was in China, but no one really thought that it was going to have the kind of impact that it did. But as we got into February, the warning signs were growing, and we started to obviously pay closer attention to it. One of our companies, Castle Systems, is one of the leading providers of security systems for commercial office buildings. And so we started to think specifically about that company and how it would help people in those buildings be safe. We also own an expedition travel company that sends people to the world's most remarkable locations, Lindblad Expeditions, to Arctic, Antarctic. We had to start to think about, in case it got worse, how would we get people home? And then I think the aha moment for me was in March, at the very beginning of March, was going to a couple restaurants that I go to often, and the impact that it was having, the severe impact it was having so quickly on those places as people didn't want to go out. And that really hit home that obviously this was going to be a health crisis, but it was also going to be an economic crisis. And we needed to hunker down with our management teams and get to work to get them through it.
Where do you think things go this year in terms of the way you're going to have to manage the company? I can't imagine Lindblad is scheduling a lot of sailings.
We've been ready to go for quite a while. The issue for us, and we have a testing protocol where we will be able to screen our guests before they come and then right before they get on the ship. So we've been ready. Actually, the challenge there has been getting people to the ships, which are depart from places all over the world. That's actually been the bigger challenge, but we do expect that we'll be back relatively soon in the new year. I think we're at a very interesting and a bit of a dangerous inflection point, but also the light is at the end of the tunnel. The vaccines have arrived. People are starting to get vaccinated. So you can start to see the light at the end of the tunnel when life will begin to return to normal, and then we'll actually be normal. At the same time, as you mentioned, I think there's just fatigue, lockdown fatigue. And so people have decided they're willing to take risk and want to, especially over the holidays, travel and see friends and family and get away, which is leading to the biggest surge, at least in this country, we've had. And so on one hand, you have great hope and optimism because of the vaccines and what that will mean. On the other hand, you have great danger because of the amount of travel and interactions people are having that are leading to great surges. And so our advice to people is we've made it this far, hunker down, stay safe. There's a light at the end of the tunnel. Let's just get there. And we will get there. And hopefully, though, we'll get there with the minimal amount of loss of life and damages as possible.
Well, let's take a big step back. Long before we knew anything about mask wearing, social distancing, quarantining. Let's go back, Mark, to your early days. You graduated from the University of Pennsylvania, went on to HBS before working at the Carlyle Group and Goldman Sachs, eventually moving on to LA-based early venture firm Brentwood Associates. East Coast native with that kind of pedigree, Carlyle, HBS. Why'd you decide to move west?
Well, I'd moved west before business school because I was always intrigued by California. I love being outdoors. I love being active. I always was attracted to the notion of California and also just the innovation and the economy out there. And so I had an incredible opportunity to work at really one of the country's oldest venture firms, group of people who were just terrific investors. And I had a chance to go there, live there, and learn from them. In many ways, it was one of the most informative, impactful years of my life, that experience. And it was wonderful. It was very hard to leave, but I left to come back and go to school. And then coming out of school, thought long and hard about going back. But my family's in the Washington area, and it was important to me, if I had the right opportunity, that I could be close to them and my parents as they got older, that we could be closer together. And fortunately, the Carlyle Group, when it was only 5 years old, gave me an offer to join them. And I viewed that as the perfect situation to come back to my hometown, to a firm that was small but had already amazing promise and a fantastic opportunity to work with wonderful people and to do it in a town that I love. And that was really the beginning of my real journey.
David Rubenstein has been a guest on this show before, had him in the library of the New York Stock Exchange before we were all spread out during the quarantine. But Mark, you eventually, from Brentwood Associates, founded Venture House Group, serving as its chairman and CEO since 1999. How were you able to go from learning with great venture partners and mentors and decide that it's time to do something on your own and put your own shingle up?
Yeah, and I should start with David Rubenstein, who, as you mentioned, is the founder of Carlyle and has been a guest on your show, is one of my role models and mentors. He was the one who hired me. We hit it off from the minute I interviewed there. And there's something about the way David approaches not just business, but life. He tries to make a difference in everything he does. He's incredibly creative and innovative. He was in the way that he positioned Carlyle, which is the reason for its success, along with the incredible investment prowess of Bill Conway and the operations of Dan Daniello, that trifecta. But then also just the things that David has done outside of business. I really admire him. And so when I got to Carlyle, it was small, very small. There was 30 people total in the firm. And as it grew over the years, it grew to be bigger and bigger. And at my heart, I'm an entrepreneur. And I either want to do something on my own, most likely, and or be in a smaller environment. And so I eventually got to the point where I had built a really good track record. I had proven myself. We were very early investors in the wireless communications industry, and there was an abundance of opportunity. And I saw that it was my chance to go off and do what the Carlyle founders had done and start my own firm, which I did, as you mentioned, in 1999. It's not easy to leave a place as outstanding as Carlyle is, but the dream of being my own entrepreneur was something I couldn't resist, and it was the right moment, and I'm never turned back.
So you're probably about 7 years into that journey, and it's 2006. You set your sights on Castle Systems, which installs and manages security systems for commercial office buildings. So many people recognize the name from the ubiquitous key fobs found across corporate America. Mark, when you first met their CEO, Gene Sandberg, the business, I understand, wasn't for sale, but Sandberg reportedly said, he met Mark, we developed this instant rapport. Being that this is the first time investing in the security space for you, was there something about it that had piqued your interest?
Yeah, so I think it's important to maybe spend a second on what my strategy was when I set off on my own. What I decided that what I really loved to do as an investor was to roll up my sleeves and help CEOs, founders, and members of management build world-class companies and help them grow and compound them over the long time. And that because I like to do that, I didn't want to have a huge portfolio. I wanted to concentrate my time and my capital in a small number of extraordinary situations where we could, as I mentioned, partner and be the closest partner to the management teams. And so that's what I set out to do when I started Venture House Group. And after a few years of doing that, I decided what I really wanted to do was to buy a company or a small number of companies that I could view as platforms that we could build and grow maybe for decades. And so I was in search of that and had been looking for a couple years. And I was actually introduced to Castle by someone. And I went to my first meeting at the company, and it was a breakfast. And I came back to my office and I told my assistant to come in with my calendar. And I said, cancel everything for the next month. I'm dropping everything until we figure out if we can buy this company. And it was because A, that was what I was looking for. And then B, Castle was and still is to this day just an extraordinary business where we protect the large commercial office buildings across America, the people that are in them. We do it on a managed service basis. And Gene had built this extraordinary business with a wonderful culture, an incredible brand, a great following. But he recognized, and I recognized, there was so much more the company could be if we gave it some capital to grow, some time, and just basically reinstilled a growth mindset into it. And so Gene, as you mentioned, we hit it off. We agreed to do the transaction at the end of 2006. And it still to this day is my core holding. It's a company I love. I'm incredibly proud of the team we've built and what we've done. We've dramatically expanded the company into new geographies, new services. We've embraced video. We work with municipalities to connect our video networks into their video networks, and on and on and on. It's just one of those things. I was actually looking for not that specifically, but a company with exactly those characteristics. And when I saw it, I knew it. Fortunately, Gene and I got along great, and he felt comfortable with me being the caretaker for his life's work, which is, I think, really how he viewed the transaction. And I was honored to have that opportunity.
So at this point, I got to sort of sidebar with you and question the vast reservoir of data that a company like Castle throws off in the midst of a pandemic. What has it told you about commercial real estate occupancy and trends that you've seen evolving over the year? And what does it portend for 2021 and beyond as basically the gatekeepers of the most magnificent structures in the United States?
Yeah. So we spent, that was from the very beginning, we recognized our unique role in helping to protect the buildings and the people in them, but also create an environment where people would return to the office as quickly as possible. So we've developed all kinds of technologies and a framework called Castle Safe Spaces, which has been widely adopted. As you mentioned, we also have this incredible data of office building occupancy, actually how it's being used. And we've now published on a weekly basis the Castle Barometer that's widely sourced as the definitive source for to what extent people are returning to offices. And what you see is that it pretty much follows as you would expect. There was a precipitous drop off to a low of kind of 12% of the occupancy pre-pandemic, right when the country went into lockdown, and then it gradually increased over the summer, and then lately it's been coming down a bit. What's interesting is not just the aggregate occupancy across America, but when you look within markets, it's very telling, because markets like New York that were hit early, where now the government has been stricter in its lockdown, have lower occupancies. Northern California, where you have tech companies that have embraced work from home, they've had lower occupancies. Places like Texas, where they have a more maybe libertarian, lenient view towards to what extent to lock people down, have consistently had higher levels of return to work. And so it's been very interesting to track. And we talk to our clients all the time. I mean, obviously, people who own real estate want people to get back to buildings, but they also recognize it has to be done safely. So they've invested a lot into things like Castle Safe Spaces, so that when people are ready to return to work, it will be done safely. But I think beyond that, not just the building owners, but business owners, I think really are extraordinarily eager to get people back in the same place. We've all done the best we can with video technologies like Zoom and Teams and others that have been fantastic substitutes, but it doesn't replace the interaction of being together. To some extent, we also had a lot of connective tissue built over years of working together with our teams. But over time, people leave, people join companies. It's very hard to do that virtually, to become a member of a team and integrate as a team when you're not sitting in person. So I think everyone's eager to get back. Everyone is, for the most part, everyone is putting safety as the top priority. But people have been preparing for months and will continue to prepare so that we can all get back into the office and work together as quickly as we can.
In no place do you see a lack of occupancy in commercial spaces as much as you do in our stadiums and arenas around the country, where the NBA, NHL, and NFL play. Certainly gearing up for the NFL playoffs. Washington football team making its first appearance in a long time, but there's going to be empty stands. And Mark, I understand that you are a big tennis fan. On this show, we had Hall of Fame President Stan Smith, the former Wimbledon and U.S. champion, on the show. You are the founder of MDE Sports, which owns the City Open tennis tournament in Washington, one of the 5 largest events in the U.S. Tournament is certainly woven into the fabric of the D.C. community, and I remember those summer weeks in Rock Creek Park. But this year threw a wrench into the plans. What was it like to manage expectations for the event in the wake of the COVID-19 pandemic? Certainly at the National Tennis Center, the Billie Jean King Arena, completely empty for the U.S. Open.
Yeah, I mean, that was we spent a lot of time last year trying to navigate the City Open through the beginning of really the COVID period. One of the first sporting events to be canceled in the world was the Indian Wells Tennis Tournament, which is a huge event in Palm Springs in the middle of March. And everyone was there on site. And 2 days before the event, they said, we're canceling it and everyone needs to leave. That was really That, I think, was the first big event. That and maybe one NBA game, but it really was the first big sporting event that was canceled. And so tennis was at the forefront of this. For a while, we thought the City Open was going to be the first major tennis event back in the world. We were the first on the calendar. We worked with our medical providers at MedStar to develop protocols that we felt would keep people safe. And we were going to be the first tennis event back in the world. And unfortunately, 3 weeks before the event, frankly, it was the travel issues that were causing us the biggest problem. We could have held the event. Unfortunately, we wouldn't have been able to do it in front of fans, but we still thought it would be great to do, provide an opportunity for the players and for people to watch it on TV. But we just couldn't. Tennis is such an international sport that we couldn't get all the athletes in and guarantee they could leave. And so, unfortunately, we weren't able to go ahead with it. Those issues ended up getting resolved for the U.S. Open. And so people obviously came and they played the Open and the Western and Southern Open before it. It was a disappointment. As you mentioned, the City Open that's been in our community now for 52 years. I actually was a ball kid when I was a young boy at the tournament. And so it holds a dear place, not just in my heart, but in generations of Washingtonians who have loved going to that tournament. And last year was the first year in 51 years it didn't happen. I was really committed to doing everything in our power to try to put it on. It just, in the end, we couldn't. But we're very hopeful for this year. We're looking forward to it. When you mentioned we acquired it in 2019, and really, again, the same philosophy we apply to our business is really tried to lift the event to a new level with just a completely different level of food, entertainment, stands, facilities, everything. And people loved it. And I know our fans are excited to come back, and we're excited to have them in 2021.
I grew up watching the Boston Lobsters play in Boston, Massachusetts. MDE Sports owns the Washington Castles World Team Tennis franchise that has won the league championship 6 of its 13 years since its founding, and has had one of the longest winning streaks in U.S. pro team sports history, winning, I think, 34 straight matches from 2011 to 13. What's been the secret of that franchise's success?
Well, that's been such a joy for me to own the Castles and build that franchise. You know, from the very beginning, and I've learned so much from owning and building that team and operating it. One of the things from the very beginning, that our mission was all about community. So our mission statement from the very first day we started it was bring the city of Washington together, promote a center of high quality fun activities, promote physical fitness and tennis, and help local charitable partners. Those were the 4 things we set out to do. We never talked about winning championships or setting record winning streaks. But the thing I learned is that because people felt there was a higher calling, that it was about something bigger than themselves, the players actually, these great players, Venus Williams, Serena Williams, Martina Hingis, the Bryan brothers, on and on and on, they too felt like they were part of something that was more than just them. And it's interesting, tennis is an individual sport. This is the one time a year, and then plus Fed Cup or Davis Cup, where they play together as a team. And then here we had this team that was just embraced and inspired by its community. And even players like Venus and Serena felt that. And so we did have this unbelievable streak of winning championships and winning matches. During a lot of that, we did not always have the best players on the court, but they always got the most out of the team that was on the court. And I really, you know, it's something that I've taken to all of our companies too, is when people believe they're part of an organization that has a higher calling, it inspires people to do things they never thought they could accomplish before. And I think that's the secret to what has made the Castles so great, and have all of those milestones that you mentioned.
After the break, Mark Ein, investor, entrepreneur, and philanthropist, and I will discuss his 5 SPACs and what to expect in this space over the next year. That's all right after this.
Hi, I'm Axios business editor Dan Primack, host of Axios Recap, a new weekday podcast featuring interviews that get straight to the point. My guests are business leaders, politicians, and reporters driving the day's biggest stories. We're joined now by Jalen Rose.
Thanks a lot.
Bill Ackman.
Thank you so much.
Senator Amy Klobuchar.
Thank you, Dan.
Steven Soderbergh.
Thanks for having us.
Andrew Yang.
Thank you. It's a pleasure.
You can find Axios Recap on Apple or Spotify or wherever you like to listen to podcasts.
Welcome back. Before the break, Mark Ein, investor, entrepreneur, and philanthropist, and I were discussing his many ventures that have led to his early success. Mark, as the pandemic created a new set of needs for market participants, SPACs certainly emerged as a major force. The NYSE raised an industry-leading $45.3 billion in SPAC IPO proceeds over the course of 113 transactions just in the last year. What's your take on the surge that led to this phenomenon?
Yeah, I mean, it's been extraordinary having evangelized SPAC since 2007 and always had a deep belief that for the right companies and the right situations, SPACs are the ideal way to raise capital. Seemingly out of nowhere, they became, mainstream and top of mind for everyone. And I think to some extent, it started by the number of successful transactions coming out of SPACs increased. And so when people saw that, fortunately, all the ones that we've done and sponsored have worked out well, but there was, the track record over the long term, weren't enough of those. And in 19 and 20, at the end of 19 going to 20, more transactions happened that were successful. And to some extent, success begets success. Perception becomes reality. And frankly, companies that we and others had talked to about doing SPAC transactions who wouldn't consider it in the past now all of a sudden saw the merits of it. Because the underlying reality of what the opportunity that SPACs provide to companies hasn't changed. It's more the perception that this is a really attractive vehicle, which we've always believed. And I think now it's just become more widely recognized. And then we got on the virtuous cycle as that happened, and more good companies would use SPACs to raise capital.
Was there something about the first quarter and a half of 2020 that set the groundwork for it? I mean, historic volatility in the market, is there some level of issues that create kind of a perfect storm that allow SPACs to flourish?
There's theories about what the time of COVID did, people not being able to travel and do due diligence. The level of, I think, corporate acquisitions went down because people couldn't get on the road and travel. Even private equity transactions went down for the same reason. And then you had SPACs out there with capital that were willing to do things. I mean, you still have to go see the companies, but on a relative basis, people think that improved the standing of SPACs relative to alternatives. I think that's a little bit of it. I actually think more than anything, it really is just the perception over time. The reality, it's not even the perception. The reality of the advantages of SPACs became accepted. Ourselves and others had been talking about this for quite a while, about why a SPAC for certain companies really is the best path. And, us and a few others were evangelizing it, but then people saw it and they saw it actually work for a number of situations. And then the spigot opened, and then it just kept reinforcing itself. And that's where we are. And there really are inherent advantages to accessing the public markets and SPACs. You can get public quicker, you can raise more capital, you have price certainty, you can share more information, you get a sponsor like us, which for certain companies is very useful. And so there's a lot of advantages to it. That said, there's other companies where a traditional IPO is probably the better route, but there's always been this set of companies who should have considered a SPAC who previously didn't, who now are embracing it.
As I mentioned earlier, Mark, you're the founder, chairman, and CEO of Capital Investment Corp 1, 2, 3, 4, and 5. So unsurprisingly, you have a deep knowledge of the SPAC product and have looked at, I guess, 1,200 companies or so for SPAC deals. What exactly do you look for in a potential partner company? Bring us into your office and tell us how you sort of scan the horizon for deals.
Yeah, by the way, just as a quick aside, when we rang the bell for Capital One, it was on the old American Stock Exchange because it was the only place you could list these things. Obviously, the New York Stock Exchange bought it. It was that beautiful building over there. feels like yesterday, but it was, 13 years ago. It shows you how much the world changed.
I think that building is still available for renovation if you want to take it on.
It's, if I had a use for it, it was spectacular.
Yeah.
That was a special place in its own right. So what we look for, and it sounds overly simplistic, but when people say, what are you looking for? My first answer is a great public company. So by definition, that's definitional, but by definition, coming out of a SPAC merger, you will be a public company. So is being public an advantage for you? Is it a good thing? Is it something that you desire? Is it something you're ready to do? That's sort of a gating question. Once you get past that, then for us, it really is, we're looking, as I mentioned when I talked about the beginnings of my career, it's the same mission, same objective that as when I started on my own now 20 some years ago, which is that we do this, we create SPACs and find investments because we want to concentrate our capital with public market capital in a small number of companies that we can help and build and grow into world-class businesses and compound for the long term. That's what we're looking for. So we're looking for a situation that's not a trade or a transaction, but it really is a way of having a stake in a company that we're going to roll up our sleeves and help the team build into a world-class company, or if it's already world-class, make it even better and compound it for the long term. And fortunately for us, since we've been at it for so long, we're able to keep an opportunistic mandate where we're not limited to one sector. And we are very growth focused because growth is the fuel that lets companies compound for the long term. But interestingly, while growth is usually associated with things like technology, you actually find growth in a lot of different areas. So we found it in travel, we found it in financial services, we found it in infrastructure, and we found it in technology. Those are the 4 previous deals that we've done. And so that's at the core what we're looking to do, invest in a world-class growth company that we can help build and compound over the long term.
I mean, do you also get personally passionate about the product like a Lindblad?
Well, definitely. I mean, that's the ideal. So I'm chair of Lindblad, this expedition travel company. And I'm always passionate about working with great entrepreneurs and executives to help them build great companies. That's something I just have a deep passion for. I love to do it. I love the people that I get to collaborate with. So no matter what the industry is, I find great pleasure in that. And I find great pleasure in the feeling of satisfaction when you set a collective mission, you roll up your sleeves, you work really hard over a long term to align an organization to achieve those goals, and you achieve them. It's one of the great feelings in life to be part of teams like that. And so that, no matter what the industry is something we're passionate about. And then, oftentimes we get to invest in industries and companies that fuel that passion even more. And you mentioned expedition travel, where we take people to the world's most extraordinary locations: Arctic, Antarctic, the Nile, the Amazon, Alaska, Galapagos. I mean, for a lot of people, going to these places are the bucket list. This is what they want to do in their life more than anything else. And we help take them there in an educational way, in a safe way, in a relatively affordable way, and providing people those opportunities. When you go on these trips and you see the experience you're providing to people, it really is an extraordinarily satisfying feeling.
My family has done a backroads trip, every year for each of the last 5 years, a similar kind of experience, certainly an experience that you don't get anywhere else. Lindblad has a long legacy, before you got involved in it. Curious the things that you bring to it to scale it, improve it, bring it to the next level.
Yeah, I think Lindblad is an incredible case study of when SPACs are just incredible platforms to help companies. So Lindblad was founded by Sven Lindblad, whose father, Lars Lindblad, actually founded Expedition Travel. He took ordinary people to Antarctic in 1966 on Chilean naval vessels. So he really was a pioneer. He opened up Bhutan for travel. Sven learned from his dad and started his own company. Sven's an incredible entrepreneur. He's still the CEO of the business. And he had bootstrapped it for 40 years. And so Sven, every few years, would borrow money and buy an old ship and renovate it. And then eventually the ship would make a lot of money, and that would give him the resources to go bootstrap the next one and the next one. And he did an extraordinary job and built an amazing company. He forged a relationship with National Geographic as a strategic partner where we co-brand all of the ships and we co-market and we have their naturalists and scientists on board. So Sven had built something very special. And at the end of 2014, we met Sven and saw the situation and said, there's a whole nother level you can take this company, but you're going to need a permanent capital base. You're going to need to build your team, but you should take this model you have that you've done an incredible job at and take it to the next level. We want to help you do that. We want to give you the capital. We want to roll up our sleeves, help you build the team. And we also hit it off. I mean, it's one of the things, again, I love working with entrepreneurs. And fortunately, oftentimes when we meet them, we develop these quick, fast relationships that are really close, like with Sven. And he embraced it and he was excited about it. And so we also let him, frankly, take a little bit of money off the table if he was going to do this. He had never done that in his 40 years. So we gave him a little bit of money. And so that's what we did. So we put a couple $100 million in the company and we rolled up our sleeves. We've helped him build his executive team, stand it up as a public company. My SPAC team, one person on our team actually went inside the company for over a year. My partner and I spent most of our time for a year helping stand it up as a public company. We hired a CFO, a CMO, a chief expedition officer, just tons of different roles. Not chief expedition officer, I'm chief marine officer. And over the 5 years we've been involved, we've built 3 ships with another being delivered this year, including the most ice-breaking capable passenger ships ever built. We bought a land-based travel company called Natural Habitat, which has been extraordinary. We've opened up new markets. And we've totally transformed the company. Pre-COVID, the company was going to double in EBITDA. The stock, the units of our IPO investors have over doubled. And the company's thriving and set to thrive long into the future. And that's just been an incredible collaboration of so many people. But frankly, at the point when we had met Sven, the company couldn't have done a traditional IPO. It didn't have the infrastructure. It didn't have the know-how. It didn't have the systems. It really took the combination of our team and our capital and the way you can get public through a SPAC that enabled this company to tap into the public markets. If it wasn't for SPACs, Lindblad would still be a wonderful business, but it would be orders of magnitude smaller. It would employ a lot less people. A lot less people every year could go take their bucket list trips. But instead, because of the SPAC, it transformed the business and transformed the experiences that tens of thousands of people get to enjoy.
When you look at a company like Lindblad going public and you compare it to sort of expedition travel names that stay private, stay bootstrapped, like Backroads, perhaps Abercrombie & Kent. I don't know who owns them, but I think they're in private equity now. What is the basic benefit that a company gets just by being a public company, but by being able to tap the exchanges and to scale that way?
Yeah, and I think that's a great question, and I think there's many benefits. I think in ordinary times, it's fantastic for recruiting employees because people see an equity opportunity that's easier to measure and recognize. So I think there's that. There's always ability to do acquisitions where you can use a listed stock is easier than a private stock. It's easier to access the capital markets when you need it. And I also think there is a little bit, although private equity can simulate this, there is an accountability with being a public company that I think is good discipline. I think all of that is only accentuated more in COVID times. And I think what you're going to see in our sector especially is Lindblad, we because of both the public equity markets and then we were able to tap into a debt facility. At the end of 2019, we had about $80 million of capital in the bank. Today, we have almost $200 million, which sounds counterintuitive after a year where you haven't been in business. But our view is now's the time for us to be opportunistic. And the combination of having a public currency that we can give to companies and also this war chest of capital, we think is going to help us take this company to a completely different level. And I think when you look back on this period for travel companies, the ones that were public are going to be generally the ones that emerge stronger and more successful than the ones that weren't because of access to capital.
So In terms of access to capital, Mark, your business is Capital One and Two Harbors Investment Corp, that's NYSE ticker symbol TWO, outperformed the S&P 500 by 22% during your tenure with the company. What made that deal so successful?
Well, that was another one. That was another great American New York Stock Exchange company that never could have it wouldn't even have existed if it wasn't for SPACs. We raised Capital One in 2001 and we created Two Harbors in 2009 in the depths of the financial crisis. And basically during the financial crisis, there was massive dislocation in the mortgage market where a lot of the capital just fled the space, whether it was Fannie and Freddie who will close their prop desks or the banks and other traders who just basically stopped allocating capital to the space. And so returns on underlying mortgage assets had become extraordinarily attractive, as often happens in a crisis, but there was no way to tap into it. And you could never have taken a new mortgage REIT public in that moment, just couldn't have happened in a normal IPO process. And in partnership with actually one of our investors who had an extraordinary mortgage investing team, Pine River Capital, and the CIO there was Steve Kuhn, and then the CEO became Tom Searing, who's still the CEO of Two. We decided we're going to stand up a new mortgage REIT to create a public platform to enable public investors to tap in to this incredible moment of opportunity. And so we stood it up relatively small. We started with $120 million of capital. And within 2 or 3 years, we raised over $3.5 billion of capital. Company had a $4 billion market cap. It is the third biggest mortgage REIT. You mentioned the returns. It significantly outperformed the S&P while we were involved with it. And it was just one of those moments in time that there was this incredible investment opportunity, but you couldn't tap into it. And so we created a platform where people could participate, and it worked out fantastically for everyone.
So most recently, Mark, Capital Investment Corp 5, this $300 million SPAC listed on the New York Stock Exchange on Wednesday, December 2nd. And much like other companies going public last year, you had to ring the bell remotely. How did it go, and what's the ambition for 5?
Well, it was great to get back. And we spent most of 2020, as I've mentioned, working with our companies, rolling up our sleeves and helping them get through COVID. We didn't feel like it was right to go raise the next SPAC until our companies were in the position that we felt comfortable, which they were by the fall. It was great to get back, talk to our investors, get the kind of support that we got. We ended up, the shoe was Exercise Green Shoe, so it's $345 million. And we're off to the races. I mean, as I mentioned, we've never had more opportunities of a high quality as we do today. Companies that we've talked to in our previous searches are now coming to us saying, now we really want to think about a SPAC transaction. Other companies through our network of relationships are coming to us. I mean, it's extraordinary, not just the number of conversations we have, but the quality of them. So, I'm incredibly enthusiastic about Capital 5, our prospects, and what we're seeing. And I think it just validates what really the big theme in the capital markets were in 2020, which are SPACs are here, they're important, and they're here to stay.
As we wrap up, Mark, you've been involved in the founding or early stages of 6 companies, I think, that have been worth over $1 billion. As you reflect back on these 30 years and all the accomplishments achieved so far, with still more to go, what are some of the most important lessons you've learned?
I'm a huge believer in a couple things, but continuous improvement. I just think always getting better is the engine that just kind of keeps me going. And it's not just on an individual basis. Our teams, our companies, is just always getting better, always learning from your mistakes, getting better, raising your ambitions, working collaboratively to do that. To do that, you need to have really good communication. You need to be aligned. And then you just need to be relentless to always get better, just always get better. And, you talk about the 6 companies I've been involved with at the seed stage or founding stage that were worth $1 billion. Virtually all of them had a point in time where their very survival was in question. But people didn't give up. They learned from their mistakes. They were agile. They worked together with their teams, and they found a path to creating extraordinary enterprises. And so that is the beautiful thing about America, not to sound, too corny, but my parents were immigrants, and they landed on Ellis Island, not far from the New York Stock Exchange, and came here because of the opportunity of America. And the New York Stock Exchange is a core part of that legacy of free enterprise in the United States and our economic system. And it's those fundamental principles that's propelled our country, our economy, entrepreneurs like me and so many others. And as long as you set high goals and you work together and you're willing to learn from your mistakes, by the way, also learn from the things you're doing well and do more of them, there's no limits. And that was what makes life so exciting. It's my career so exciting. It's what motivates me all the time to work with the great people I get to work with.
No limits, Mark Ein. Can't wait to have you back on the show when Capital 6 launches. Hope that's not too long from now. But for now, thanks so much for sharing some of your insights with us and joining us, our first episode of the year inside the Ice House.
Thank you, Josh. It's been great being with you.
And that's our conversation for this week. Our guest was investor, entrepreneur, philanthropist, and civic leader Mark Ein. If you like what you heard, please rate us on iTunes so other folks know where to find us. And if you've got a comment or a question you'd like one of our experts to tackle on a future show, email us at icehouse@theice.com or tweet at us at IceHousePodcast. Our show is produced by Kearney Ferguson with production assistance from Ian Wolfe and Ken Abel. I'm Josh King, your host, signing off from the library of the New York Stock Exchange. Thanks for listening. Talk to you next week.
Information contained in this podcast was obtained in part from publicly available sources and not independently verified. Neither ICE nor its affiliates make any representations or warranties, express or implied, as to the accuracy or completeness of the information and do not sponsor, approve, or endorse any of the content herein, all of which is presented solely for informational and educational purposes. Nothing herein constitutes an offer to sell, a solicitation of an offer to buy any security, or a recommendation of any security or trading practice. Some portions of the preceding conversation may have been edited for the purpose of length or clarity.